The stock market is in chaos. Everywhere you look, people are panicking. Investors are selling their stocks at record speed. Headlines scream about crashes, corrections, and uncertainty. And the big question is why? Why is everyone suddenly dumping their stocks? What do they know that you don't? And should you be selling too, or is this the opportunity of a lifetime? To answer this, we need to break down the psychology, the economy, and the hidden forces driving this massive sell-off. Because the truth is, people do not sell stocks for no reason. There are always triggers: fear, greed, uncertainty, and sometimes manipulation. The first reason people are selling their stocks right now is fear of a recession. For months, experts have been warning about slowing growth, rising unemployment, and cracks in the global economy. When people hear the word recession, they panic. They imagine job losses, shrinking businesses, and falling stock prices. And what do? They sell to protect their money. But ironically, that panic selling often makes the market crash even harder. The second reason behind the sell-off is inflation and interest rates. Prices have been rising across the board: housing, food, energy, you name it. And to fight inflation, central banks keep raising interest rates. Higher rates make borrowing more expensive, which slows down businesses and lowers consumer spending. They also make bonds and savings accounts more attractive compared to risky stocks. So when investors see interest rates rising, many of them pull money out of the stock market. It's not always rational, but it's predictable. The third reason is corporate earnings. Companies are starting to report weaker profits. When businesses make less money, investors worry that their stock prices won't keep growing. Big tech companies, retailers, and even banks are warning about slowing demand. And that's enough to make investors hit the sell button. Because the stock market is driven not by what is happening now, but by what people expect in the future. The fourth reason people are selling stocks is fear of global instability. Wars, trade disputes, elections, pandemics, any of these can shake investor confidence. The market hates uncertainty. And when people don't know what's going to happen, they'd rather move their money somewhere safer. That usually means bonds, gold, or just holding cash. But here's the thing: sometimes the fear of instability is worse than the actual instability itself. Another powerful reason behind the sell-off is herd mentality. When people see others selling, they panic and sell too. It's human nature to follow the crowd. No one wants to be the last one holding a stock when it drops. This creates a chain reaction. One person sells, then another, until it snowballs into a market-wide sell-off. This is how fear spreads like wildfire. But here's the truth most people don't realize. The big players, hedge funds, institutional investors, and billionaires actually love when the market crashes. Why? Because it gives them a chance to buy stocks at a discount. When retail investors panic and sell, the smart money steps in quietly and buys. It's the classic buy low, sell high strategy, but the average person usually does the exact opposite. They buy when prices are high and panic sell when prices are low. And that's why so many people lose money in the stock market. So now the question is, should you be selling too? Or should you be doing the opposite of what everyone else is doing? To answer that, you need to understand this simple fact: stock market crashes are not new. They have happened before and they will happen again. In fact, almost every market crash in history was followed by a recovery. Sometimes it takes months. Sometimes it takes years. But the market always finds a way back up. Think about the dot-com crash in the early 2000s. Tech stocks collapsed. People lost fortunes. But the companies that survived, like Amazon, Apple, and Microsoft, went on to become some of the most valuable businesses in the world. Think about the 2008 financial crisis. Banks failed. Housing collapsed. The stock market lost one-half its value. But those who stayed invested, or even bought during the crash, saw their wealth grow massively in the following decade. Even the year 2020 pandemic crash was one of the fastest declines in history. The market lost trillions of dollars in weeks. But then it rebounded faster than anyone expected. Those who stayed invested doubled or even tripled their money within a year or two. The lesson is simple. If you sell every time the market falls, you will lock in your losses. But if you stay patient or even buy when others are panicking, you set yourself up for huge long-term gains. That's why legendary investors like Warren Buffett always say, Be fearful when others are greedy, and greedy when others are fearful. Right now, everyone is fearful. That means opportunities are everywhere if you know where to look. But here's the catch. Not every stock will recover. Some companies will go bankrupt. Some industries will never return to their old highs. That's why it's so important to focus on strong businesses. Companies with solid fundamentals, low debt, and growing industries behind them. These are the stocks that bounce back the fastest after a crash. Another smart move is diversification. Don't put all your money in one stock, one sector, or even one country. Spread it out. That way, if one part of the market crashes, another part might hold steady or even rise. Diversification is the simplest way to protect yourself while still building wealth. Now, let's talk about psychology. Because at the end of the day, investing is more about mindset than math. The average investor underperforms the market not because they do not understand stocks, but because they cannot control their emotions. Fear makes them sell too soon. Greed makes them buy too late. If you can master your emotions, you can master investing. So why is everyone selling their stocks right now? Because most people are controlled by fear. They hear scary headlines. They see red numbers on their screens. And they panic. But the smartest investors know that fear creates opportunity. If you want to succeed in the stock market, you need to think long-term. Ask yourself, will the world economy still exist 10 years from now? Will people still buy products, use technology, need healthcare, and consume energy? Of course they will. Which means the stock market will always find a way to grow again. That's why selling everything out of fear is almost always the wrong move. Instead of asking, should I sell? You should be asking, what should I buy while prices are cheap? Because history shows us that every crash eventually looks like a buying opportunity. Here's the harsh reality. The average investor buys high and sells low. But the wealthy investor does the opposite. They buy low and sell high. That's why market sell-offs transfer wealth from the impatient to the patient. So the next time you see everyone selling, remember this. The stock market isn't just about money. It's about psychology. And the ones who win are the ones who stay calm when everyone else is panicking. Selling may feel safe in the short term, but holding or buying more could make you rich in the long term. It all depends on how disciplined you are. So while everyone is rushing to sell their stocks right now, the real winners are preparing for the rebound. They know that chaos creates opportunity, and they are positioning themselves to take advantage of it. The question is, will you join them? Or will you panic and sell with the crowd? The choice is yours. But history has already shown us the answer. Those who stay patient, stay disciplined, and stay invested are the ones who come out on top. If this video opened your eyes to what is really happening in the market, make sure to like this video. Subscribe for more investing insights. And tell me in the comments, are you holding, buying, or selling your stocks right now?